Perfect. So yeah, any questions on anything that the analysis that we've done so far?
With Beyond Meat.
Mm-hmm.
I really like the company. Like I've tried it, and it is actually really nice. I know you said you didn't like it too much, but I think I'll probably wait until it goes down.
Yeah.
Like share price, and then get into it on long term.
Yeah, definitely. I think it's definitely one for, like, I just think that the potential of the company over the next 3 to 5 years is just crazy. Especially if they can land the McDonald's deal, and they've already got a Walmart deal. It's crazy.
Yeah, that's gonna be crazy. Because like with what was it, with Greg's, when they introduced the
vegan sausage roll.
Yeah, they made so much money from that, and that's I think that's why everyone has got everyone involved, like the other companies and brands.
Yeah. I remember that when that happened, it was crazy. Like there was literally people queuing up outside to get it. It was mad. And again, when you look at the news about it, it's crazy. Look at this. Tesco pledges to boost sales of plant-based meat alternatives by 300%. What else was there? There was more news that I saw about Beyond.
It is the future. It just makes sense.
Yeah, it just makes a lot of sense. There's a lot of good news about it. So that's that one. So now that I think everyone's back in, I think, is there anyone that was waiting to get back in? Oh, that is not really behaving. What a sec.
I sort of wish I got it when it was in April, because it was so cheap.
Oh yeah, it was well cheap ages ago. Okay, cool. So what I'm going to do is I'm going to go on to Tesco, and we'll compare Tesco to Beyond Meat, and you'll be able to see the numbers that me and Morgan saw yesterday that just made us go, because I've done a trade on Tesco just because I knew they had their earnings announcement today. So I knew their earnings would be up because obviously lockdown, more people have done deliveries and so on and so forth. But then when we started taking a bit of a deeper dive into the company, like, not too sure about this. You're turning over a lot of money, but it's not that great. So first of all, we'll look at it in the technical aspect. So we'll bring it up here. So Tesco PLC. So again, it's kind of oscillating. It's not like a clear uptrend. It's just kind of going sideways. So for me, straight away, for a long-term investment, I don't really want one that's going sideways. I prefer one that's going up. So that straight away on the technical was a bad sign. So from that, I probably wouldn't have gotten it anyway. Next was we tried to think of the positives for Tesco. The main positive for Tesco is that it's essential. It's kind of the backbone of British shopping, apart from Sainsbury's. And obviously they're diversified, so they do Tesco Mobile, they do Tesco Petrol, and a few other things like that. But again, just didn't think that they were that, like, when you think of Tesco, you don't really get excited. You know what I mean? It was just a bit bland on that one. They have got a new CEO. So that might mean that things might change around soon. But let's get into the numbers on this one. Oh, no, wait, the first one. The first set of numbers that we want to look at was the chart, right? So on the summary, we can see, go down. On the right-hand side, you've always got the little growth candles. Why is it not doing it now? What? Here we go. So if we look at this is just ridiculous. So in 2017, despite revenuing 55.3 billion, they made minus 40 million. Now, for me, straight away, if you're revenuing 55 billion and you're not profiting, that's a little bit worrying, especially if you're just a corner shop. Now, the next year, earnings actually went up to 1.21. Then in a year, the actual difference that they made wasn't too great. Even though the revenue went up from 57.49 billion to 63 billion, they only really increased their earnings by 1.21 to 1.27, by 600 million ish. If no, that'd be 60 million, which again for me isn't that great. Now, this is the bit that really interested me. Is from 2018 to 2019, despite the revenue going up, their earnings went down. So for me, again, that's just not a good sign for me. So then let's get into the financials. You can see. Okay, cool. So if we break it down, you can see the revenue increase here from 2018 to 2019. We can see the gross profit, operating expenses, the net here. Again, it's decreased. Why is their actual profit decreasing? That doesn't make any sense to me. So then when we go into the balance sheet and we look at the assets and the liabilities, this is where it got very interesting. So cash that they've got, remember, cash is king. You need to be in a position to pay off your debts. They've got around, I think this is billion, right? 3 billion in cash they have. And then liabilities, 17 billion of liabilities, 6 billion in long-term debt. Now, can they cover that with their cash? Absolutely no freaking way. So for me, again, alarm bells are ringing here. I'm like, why are you 17 billion in debt? Like, what's going on? Why is it increasing 19 to 20? Yes, you've got it down, but again, it's just not, it just doesn't look great to me. Then if we go to their assets, so their assets got 38 billion worth of assets, and that's in property, plant and equipment stuff. So again, maybe they've been buying up some of the venues that they use for it, but then when you look at this accumulated depreciation, that is just not healthy at all. Yes, they've got 1.2 billion in intangible assets, but again, the numbers just aren't really that good. Cool. So that's kind of that one there. The PE ratio was 21.62. Earnings per share was 9.90. Yeah, just all in all, not too great of numbers there. Morgan, anything you want to say on that one?
Nah, not really.
Why am I muted? Am I back?
Yeah, you bet.
Okay, cool. Cool. So, any questions on that one, anyone? So we'll start with Tia. So does that make sense? The difference?
Yeah, wait. What does accumulation depreciation mean?
So depreciation is just when the value of something's going backwards. So it's like, say, for example, when you get a car, if you get a car for 30,000, the moment you take it off the parking lot, off from the shop.
Oh, it's already dropped in value.
Yeah. So that's all that is. So all these words are just like big fancy words, but in reality, when you actually understand what they mean, you're like, oh, why didn't you just say that?
Why is it just not natural? Yeah. Okay.
So you can see, like, that's not a good sign when you look at.
Yeah, because they're so high. I never knew Tesco was in so much debt.
Yeah.
Like, but when you think about it, like the outlook of it, you think, oh, it does make sense because they have so much money they need to put into things.
Yeah. So that's not a bad thing for big companies if they use it correctly. So if they use it to cover the costs of things that they know they're going to sell for like 10 times the price, then it's fine. But if they're not, the markup that you can get on food and getting yourself into debt on food isn't like getting yourself into debt on clothes. So say, for example, Louis Vuitton, Moet Hennessy, like if they get themselves into debt, but they're buying gold bracelets for Louis Vuitton bags or whatever, that's cool because the value of that's
selling it at a value price. It's higher. Yeah.
Whereas
when food drops and obviously it goes out of date and like, you know, there's like precautions with that.
Yeah, it's just not really what you want to be doing. Like you don't want to be getting yourself in that much debt as a food company. And I think this is what this number is their food that they hold, the amount of it that gets wasted. I think that's what it might be.
Do you think there's a problem, obviously, because of where coronavirus has stopped a lot of the travel and trade that's going on with food?
Yeah.
I mean, obviously, do you think this is going to make it go down even more?
Well, yes, in this area here, but their revenue is actually up. Today they did an earnings announcement today, and their revenue is up just simply, obviously, because of online shopping. But I think when we look at the bigger picture, when they do their end of year report, this is huge.
That's when it'll be a big drop.
That's when they're in a lot of trouble. But obviously Tesco make most of their money at Christmas. Again, it's a bit of a weird 50-50 on Tesco. But again, for me, as a long hold, that's just a no-no. Like if that was a friend coming to you and showing you their money and their bank account, would you invest in them?
No. If they were like Tesco, no.
Nah, you just like sort your stuff out a little bit, and we can maybe have a conversation. But until then, nah, not at all. So yeah, Aaron, are you there?
Yeah, I'm still here.
Cool. Does that make sense in terms of why Tesco looks bad?
Yeah, that makes total sense. You can see like the comparison between Beyond Meat and Tesco.
Yeah, it's just completely different financial situation. Yes, Tesco's making profit, but they're not running like a clean, great business. Like there's just too much debt and there's just too much depreciation as well. Cool. Yeah. So Morgan, anything to say on any of that? Nah. Okay. So what I'm going to do now is I'm going to do a live analysis with Morgan on a company that I've been looking at called Avacta. Avacta is a pharmaceutical company. So again, I don't really like investing in things that I don't know and I don't understand. So the only thing that I understand about Avacta is that they're trying to make anyway a COVID test. So the test actually would work in 20 seconds. So it's just you put it in your mouth and it tells you if you've got COVID in 20 seconds, which for football grounds, for stadiums, concerts and stuff like that, that would just be perfect. Again, let's just look at the obvious things. So here we go, the earnings. Earnings is up revenue, wow, I don't even know how they're doing that. 6.37 to 2.73. Now, obviously, pharmaceuticals, they're going to be in a lot more debt than anyone else because they just kind of like, it's like a lottery thing in it. It's once they get something that they've, like a medicine or something, as soon as they drop a patent on it or they get the distribution rights sorted, that's when they're laughing. So that's where...
Don't they depend on funding? Don't they depend on funding?
Yeah.
And like a lot of council activities that happen in the world.
Yeah.
Because obviously in this, are they an American company or are they UK?
I think they're UK.
Wow.
So yeah,
because obviously the UK are very specific with what they bring in as well.
Yeah. So they've got way more like regulations and stuff to go through than, say, for example, if they were, obviously there's regulations and stuff in America, but in comparison,
we're a lot more safer.
Yeah. So avacta, though, one thing I will say about it is it's a massive uptrend. Look at this massive spike that happened here. And that was from when? That was from the 17th of March. So, yeah, that's crazy. I think when I looked at this, yeah, exactly. So all the pharmaceuticals, because of COVID, are just flying up at the moment. And again, when we look at this this channel, we can see here, this would have been a good buy point here. I think at the moment it's slightly overpriced. If we go weekly, it's got some space to move up. So yeah, but however, there was a lot, this buying pressure that was there. But again, that would probably be around the peak of COVID. But if there's a second wave and a second lockdown, then I do expect this to kind of surge up a little bit more. So let's look at some of their more deeper financials. Okay, so this is all in thousands. So expenses, research development. So yeah, you can see that's where most of their money is going to, is research and development, and then admin stuff. So this is probably like court stuff and all sorts of stuff like that. Their net income. So again, we can see they're in more debt than they were before. Well, not debt, but their net income's going backwards. Balance sheet. Okay, so their total cash, they've got 5 million in cash. They did have 13 million in 2017. Don't know why that's gone backwards. Assets, they own 6 million worth of property and equipment. And then their liabilities, yeah, 23. Yeah, that's quite a bit. So it's kind of like a 2-to-1 almost on their assets versus their liabilities. So again, for me on this one, it's not too great, but because it's pharmaceutical, it's just always a bit tricky, isn't it? Let's see if we can get their long-term debt. Morgan, what are you saying on this one so far? I'm going to get you to do some numbers on it.
Personally, I don't understand it, and they're not making any money at the moment, so I wouldn't really invest in it myself.
Yeah, I agree with you on that one. Yeah, it's just their numbers, they're just a bit of a mess at the moment. So yeah, even though they've got a really low share price, I think their price at the moment is like £11 or something like that. I just think, is it worth putting in a couple of thousand? Probably not. Is it worth putting in a couple of hundred? Probably not. Again, I'd probably buy one share of it. If that, yeah, their price at the moment is £1.78 per share. So yeah, you can probably afford to lose £1.78. But again, disclaimer, investing comes at a risk, and obviously all the rest of that stuff. If you're unsure about the risk, consult a financial advisor. So yeah, it's £1.78 at the moment. It's got some good potential, but it's just not quite there yet on it. So yeah, that's it. But but I think with this one, if they can get any kind of funding, if they can get like a big funding of like $1 billion, then they're laughing. So that's that one on that one. So yeah, that's pretty much everything for this call. We've gone over quite a few things, gone over how to read them. We've gone over a couple of stocks. We've gone over the fundamentals you want to look at. We've gone over how you want to calculate some of them. So yeah, anybody got any questions whatsoever on anything or any stocks that they're looking at that they want our opinion on? No? All good? Sweet. Okie dokie then. All right, guys, thank you very much for tuning in. Much appreciated. I'll speak to you guys later.
Yeah, cheers, man.
No worries, man. See you in a bit.
Thanks,
bit.
Kenny.
Bye.
Thanks.